We've seen this so often where Congress or the IRS makes these changes to the tax code, and then the everyday individual is kind of left scrambling. And I know you probably see this every day in your office.
Yeah. I mean, just about every 4 years, we get the president's going to pass some new tax law, right? Which is why, as we talked about, David, our tax code has morphed into this 80,000-page monstrosity of tax laws and tax codes, and so with that, we know that, hey, changes are probably coming. The risk is what we see there, the new tax proposals that are coming, the odds are taxes are going higher, right? We've seen two big changes recently. The Secure Act in 2019, the Secure Act 2.0 at the end of 2022. Those had big changes to specifically to retirement tax law. Firstly, they pushed the RMD age back to 72. That wasn't late enough for them. 3 years later, they pushed it back to 73 with a phase out. Starting in 2033, it'll be 75. 75 years old, having to forced to take out money from those IRA accounts. The one, though, that I think is going to affect many more Americans than I think what people are prepared for is the new inherited IRA tax laws. Previously, David, as you know, you can take out you inherit an IRA, you get your lifetime to stretch that IRA out, take a small minimum distribution every year, but at the end of your life, that's when it had to be fully depleted. Now people have 10 years. 10 years. If you inherit $1 million from your mom, dad, great. You have to recognize an extra $100,000 a year on top of your normal income, and you're required to pay taxes on that. It's a big change, and I think it's going to affect a lot of legacies.
Catch Retire Ready with David Nicholas Sunday between 11:30 and 12.